The RMB BER Business Confidence Index (BCI) remains stuck in the slow lane. After a 5-point decline in the second quarter, the BCI slipped by a further 1 point to 39. This is 3 points below the long-term average of 42 and implies that just over 60% of respondents are dissatisfied with prevailing business conditions. The survey was conducted between 6 and 25 August, a period marked by the introduction of steep US tariffs on South African exports. While these trade measures were widely noted by respondents, their direct impact on activity is difficult to isolate given concurrent factors such as front-loading of orders, cancellations, and temporary production stoppages in the automotive sector. Nevertheless, the tariffs likely exerted a negative influence on sentiment. Domestically, the environment was relatively stable with limited political disruption and some policy support from the South African Reserve Bank's recent rate cut, which offered relief to interest rate-sensitive sectors. Furthermore, the SAP announced a preference for reducing the inflation target to 3% from the current midpoint of 4.5%. This adjustment would create scope for additional interest rate reductions should inflation expectations converge towards the 3% level. Meanwhile, consumer prices saw a slight uptick after an extended period of subdued price growth. In this quarter's feedback, respondents noted ongoing structural constraints impacting business activity, such as increased electricity costs, administrative requirements, and competition from imports. Other additional factors include inefficiencies related to corruption, regulatory procedures, and logistics. The feedback also referenced changes in municipal service delivery, which businesses identify as an operational risk. With local government elections on the horizon, these concerns are likely to gain prominence. A sector-level analysis of the index reveals significant disparities across sectors, as overall figures mask pronounced variations driven by sector-specific factors. Automotive dealers were notably more upbeat, buoyed by recent interest rate cuts, although momentum in sales appears to be plateauing and skewed towards lower-priced models. Building contractors also reported improved sentiment, supported by steady non-residential activity and a slight easing of pessimism in the residential segment, suggesting stability rather than acceleration. In contrast, wholesalers saw confidence retreat after a prolonged period of strength as consumer goods sales softened. Retailers faced a similar downturn, though higher-income households and furniture sales provided some resilience. Manufacturers remained the most pessimistic, with sentiment weighed down by rising operational constraints and global trade uncertainty, despite modest improvements in the underlying activity indicators. In sum, South Africa's business confidence trends reflect a broader global pattern of normalization following last year's political shifts. Initial optimism has faded, leaving sentiment consistent with an economy merely holding steady. Current confidence levels are insufficient to support stronger growth, investment, or job creation, reinforcing the importance of timely and effective implementation of structural reforms to facilitate economic expansion.